Well, be talking about tonight is Adobe earnings. We're going to be talking about Tesla. Is it time to buy? And we're going to talk about just this. It's a very slow news Thursday. So, not a lot to go over. We'll talk chart. We'll do some chart requests. And we'll, of course, go over this time last week. We went over Thursday night stock charts live, the weekly charts, and I said one trading day left to go. And man, that Friday, last Friday, made a big, big difference, in particular with yields and the US dollar. So will it be different this week? We'll see. So let's get to it. Let's first say hello to folks. And we have Franklin. Welcome. Thursday's usually a snow night. All right, so let's go over Adobe. I think this tells it all. Adobe surfs AI wave to post record revenue as its stock soars after earnings. So really, really good earnings out of Adobe. The shares closed down the day at 458.74. The anticipated market maker move was about 41 bucks. And we saw a last tick. Wow. They blew away. Call sellers got annihilated on this one. Option sellers did good. Call sellers got annihilated. So this should put a bid under the market. It's not that Adobe's a market mover, but this is a market that is being dripped up. It is looking for anything to keep it propped up higher. So this time last quarter, I would have said, Adobe, who cares, really? Now it's a market looking for a reason to continue up higher on very, very thin volume. So this is probably going to bid the market. Let's take a look at the NQ, the futures. And we're down fractionally on the futures. But I think that we may give back some territory tomorrow morning. Then they close it up higher for the week. Now, let's go to the topics at hand. Let's talk about economic data this week. Retail. Why is this not popular? Oh, here we go. Okay. Retail sales is tomorrow, I believe. Or is that next week? That's next week. Okay. NFIB small business optimism, better than expected. Consumer price index came in less worse, allowing the equity markets to rally even at the core, less worse. FOMC rate decision, we had a hawkish Fed share, but the markets didn't care. They're not listening. Look at the budget. Monthly U.S., not quarterly, not semi-annually, not annually, not monthly U.S. federal budget deficit. Expectation was for negative 262.5 billion, actual 347 billion. So they spent nearly $100 billion, let's say $80 billion more in deficit spending than what was projected. These are the brightest people in Washington. Thursday, today, initial jobless claims rose. Producer price index declined. That allowed equity markets to rally. These jobless numbers are a problem, folks. If we continue to see U6, U3 unemployment reports rise month over month, the markets are not going to like that. The markets have been going up on bad news is good news, but when you start losing jobs, it's very difficult to keep this market moving up higher because there's something very, very wrong with the consumer, and the consumer is the backbone of the economy. It's so hot here, dehydrated. PPI year over year, 2%, a better than expected read by a mile. And tomorrow we're going to get import prices. These have been rising. So they're expecting flat. My guess is they come in hotter. The only thing that may prevent that is the strength in the U.S. dollar. Consumer sentiment, 10 a.m. What the hell just happened here? What the heck just happened? I just lost everything. You got to be kidding me. Oh, you got to be kidding me. All right. I didn't have a ton to go over anyway. We may be cutting this short tonight. Oh, man. All right. Schiller PE ratio. We are at 35.38 on the Schiller. So equity markets are overvalued on the Schiller and on the Buffett indicator. I'm just going to jump to the weekly charts. I'm kind of ticked off right now that I just lost all that. All right, let's begin. Let's say hello to folks so I can chill out for a moment. Larry, are you getting the alerts now? Are we good? Worst case drawdown for the S&P, maybe 25, maybe 50%. If it's the one, meaning, do I have the yield curve up here? If it's the one, meaning we have yield curve uninverted, I think that your estimates are very, very, they're conservative to reasonable at the 50% level. I think that we can get destroyed here. If you take a look at here, let's do this, the transports. You take a look at the monthly chart of the transports, and the transports are a leading indicator for the economy, for the equity markets. I always say that as go the transports, so goes the rest of the market. And while the Dow Jones, not even the Dow Jones, it's stalled out. The S&P 500, the triple Qs, they've been putting in all-time highs. Transport's not confirming. Dow Jones has stopped. Small caps are not confirming. Not that you would expect them to in a rising interest rate environment. Small caps usually tend to outperform roughly 6 months after the first rate cut. So we're not at that juncture yet where we're going to see a small cap rally. The only caveat to that is if, like today, we had a very good bond auction and yields came down. So if yields come down naturally, then you can get a small cap rally, and perhaps that'll be the cherry on the cake, meaning we only have a few stocks driving the equity markets up higher. So do we get a dash for trash? And that's the phrase that you'll hear, dash for trash, meaning these stocks haven't participated yet. There's a lot of shorts to get squeezed. The NVIDIAs of the world are way too extremely expensive. So what do? They go to the junk stocks, dash for trash, and pump the market up higher. When you see that, then generally, then you're in for a lot of problems, especially when that yield curve uninverts. So, I think your projections are fair and reasonable, to be honest with you. Sean, welcome. Talon, hey Bob, you called Tesla, and I doubted. Yeah, we got long of Tesla, and I'll go over the trade in a moment. We sold out of it today at the open. I starting to slip. I said, let me just book profits here. I kind of beat myself up on the trade because I didn't adhere to my discipline, and in a way, I corrected the behavior, but I didn't follow my strategy, which I like to do. So I'll say that we did okay on the trade. We did good on the trade, not better than okay. But I still diverted from my discipline, so I'm still beating myself up over it, if you will. So it's great that we made money, but it was a little bit more difficult than it needed to be. GTN, you have 19 insiders buying shares above $8. Is Talon on? Yeah, that's Talon. Talon, you wanted me to review Meta, right? For short. I'm going to write down GTN for Michael. Probably going to do a lot of chart requests tonight. I don't feel like going back and digging up those articles I lost. Meta, short, GTN. Okay. And yeah, gold, we're going to go to the chart of the US dollar today. Gold initially took off on that PPI report, producer price index, but the dollar recovered and just ripped the face off of dollar bears. So dollar bulls got hammered, and we're probably going to see lower lows. It's very similar price action to what we saw last week on gold. This time last week, gold was at the highs of the week. It had broken out. But by the end of business on Friday, one trading day left to go, the dollar was a train wreck. So, excuse me, not the dollar, the price of gold. All right, so let's get to it. The Fed's balance sheet, I'm not going to bring it up. It rose this week. Expectations for a rate cut. This is why stocks are going to continue up higher. 70% probability in September. Now, we were at 67% after Jay Powell spoke yesterday. Overnight, we were at 69. Now we're at 70. The market just said, we're not listening to you, Jay. We're good here. So equities, they're going up higher. They're going up higher right now. And that's just the way it's going to be. Do I agree with they should be going up higher? No, of course not. But Mr. Market is always right. We don't trade the market that we want. We trade the market that we have. So, I have a short position on the Qs. It's like a placeholder. And when we get the signal, we're going to lean in very, very heavily short, just as we did the past several times. But right now is not the time. So we're going to go over gold. Okay, you're on my list, Alan. I got you. Jody, welcome. Okay, so November odds of a cut, 81. December, 97. These are the highs of the week. The highs of the week. So the inflation data is behind us now. Yes, we get import prices tomorrow. But in all probability, equities are going to continue up higher, at least the Q names. Bullish percent index, we have bullishness returning to the markets. We're at a little bit of a resistance there, but we're not at extremes. We're not extremely bullish. We're not extremely bearish. So the market can continue to grind up higher. Advances versus decliners. So this is kind of bearish. We're putting in lower highs, and today it was a very, very bearish day for the NASDAQ composite in terms of advances versus decliners, because the comp closed up. Think about it. NASDAQ composite closed up, but there were far more decliners than advancers. Yield curve we already covered. Nothing happening here. We're flat on the week. Green light to the equity markets. Dow Jones Industrial Average. Why are these daily charts? Ugh, I pulled up the wrong one. Let's get the right ones up here. Okay. We did the yield curve. CRB Commodities Index moving up higher. Yields breaking down on the week. So what we did this week on yields is that we took out the lows of last week, but it's not a very aggressive drop in yields. So were a very aggressive drop in yields, the markets don't like that. They don't like it as much as you see yields ripping through the ceiling. Gradual pullbacks on the 10-year is bullish for the equity markets. It's manageable. So we know the whys behind it. Inflation readings came in less worse than expected. We had a good bond auction today. So yields are coming in. So we can understand the whys behind the pullback. Let's take a look at a daily view. Clearly, the path of least resistance is to the downside here on yields. Now, bond prices, they're getting ready to break out. And we've been talking about this, and I think it's worth spending a little bit more time on the TLT tonight for a reason. Are we seeing a bottom in the bond market? Let's riddle that question. Quarterly chart. We only have 2 weeks left to go in the quarter. Bullish key reversal. So what do we want to see here? And you can see how much we follow this. We've seen failure, bear flag, failure, bear flag, failure, bullish key reversal bar a couple of quarters ago. Are we getting a higher low? Are we setting up for a breakout? Let's be conservative. I think if we get a close above 96 quarterly time frame on the bond market, on the TLT, stocks are going to rip through the ceiling. Why? Bond yields are coming down with no Fed. Monthly view. This is a monthly breakout, folks. Again, 2 trading weeks left to go here. A lot can happen, but very, very bullish breakout here on the TLT, 20-year bond ETF. Yeah, we'll do corn. I know you guys have crazy inflation. What's your inflation rate up there? Disaffected Canadian. What did I do my list? There it is. I watched a couple of Instagram videos about egg prices and whatnot up there. Crazy. You are on the list. Okay. Moving on to tips. The tip market is saying, listen, inflation is still here. It's alive. We're afraid. We're buying Treasury inflation protected securities because we want protection. Daily view. This is probably going to break out very, very soon. The dollar. A really, really incredible breakout, a reversal here on the week. Now, I always talk about pullbacks and retests, right? This is exactly what we got. So the dollar looks very bullish. And think about it. Just a few days ago, on the 9th of June, ended the petrodollar. The petrodollar no longer exists. For now, it's still going to take time to run off. But right now, the dollar is the least dirty shirt in the bunch. Yeah, I'm surprised. Is Trudeau going to survive this? Is he really going to, when is he up for election? And is he going to survive this? I like that his opponent, very, very articulate. I forget his name, French name. Euro. So one of the reasons why the dollar is so strong, I just try to put the cap on the microphone. one of the reasons why the dollar is so strong is you had the EU elections, and they went very, very far right. Macron is calling for new elections, and so right now the EU is in a little bit of a mess. But I still think that this is going to recover, and the euro is going to proceed up higher. So right now, short-term bearish euro, longer term, I think relative to the US dollar, it goes up. Absolutely not. They moved election days, so a dozen MPs can qualify for pension. Everyone hates the. Yeah, you guys have it really, really bad up there. That's really a bunch of Marxists. It's really, really bad. I don't plan on going to Canada soon, so I don't mind saying that. But really bad. I feel terrible. All right, yen. Weekly chart. Yen it's down, but I think we're breaking out. Volatility. You know, they have a saying that when the VIX is low, you got to go. When the VIX is high, you got to buy. You know, I've seen the VIX down in the 9s for years, not years, many, many months. So while I heed that warning, I also know that back in 2017, 2018, 2007, right before the crash, we had volatility down in the single digits. So be forewarned. Dow Transports, we kind of covered here. I keep saying this. This is either one of the greatest tops of all time or one of the greatest consolidations of all time. So I'm not ready to say that this is going to break down. This is if we break out here, we're going a lot higher. This is a multi-year base on the Dow Transports. And the fact that we haven't broken down yet to new lower lows relative to the 2023 lows with stochastics nearing oversold levels, I don't think it's going to happen. So, you know, I love shorting. I love shorting the market. But, you know, you gotta have a thesis, because you take a 100-year chart of the Dow Jones Industrial Average, and it looks insane to short the market at any one given time. So you need to be very, very deliberate in the whys. You need to have an edge. Why do I want to short this market? It's certainly not the transports. They may be lagging right now, but they're not broken. They're consolidating. And if we break out, we're going a lot higher. Let's go to a daily view. Today was not a good day for the transports. Down a percentage point, broke support. Dow Jones Industrial Average weekly chart still hugging the lower band of support. Momentum is not going in the right direction. Lower highs. You know, can this hook up, become a higher low? Sure, no doubt about it. We're not ready to short this. You can't short this. Not yet. We don't have a break. Daily chart. You know, one would have thought a few days ago when we broke this descending wedge formation that we would have rolled over. We would have broken support. We didn't. I thought that momentum, and I use these are my two favorite indicators. Momentum is measured by RSI and stochastic. I'm going to use this point here because this is when I was thinking, okay, we're probably going to roll over after this breakdown to new lower lows. The problem is it didn't happen. We've now broken out on stochastics. Now, this in and of itself means nothing to me until I get confirmation on RSI hooking up, as well, of course, as price. Price and volume trump the indicators, but the indicators are very important to me as well. Not many people use them. I use them. Moving on. S&P 500 weekly chart. Now, We broke down a few weeks ago back here, and we were short of the Qs at the time because the Qs broke down. We made money. We covered. I said, I think we're going up, and we did. All-time record highs this week. We're extended here on momentum. A lot of people, you get these stupid rules of thumbs, like from Technical Analysis for Dummies. Stochastics, you sell your stock or you get short when stochastics go above 80. Oh, let's see how that would have treated you. Let's do a hypothetical. You're doing an intermediate term swing trade on the S&P 500. You want to short it, and you're going to bet. Let's use 85. I'm going to go crazy. Let's use 85 to short the S&P 500. Okay, that would have happened here, crossing above 85. November of 2023. You would have been shorting here. You would have been shorting a breakout. So we don't use that rule of thumb. We look for divergences. Like right now, here's the divergence that we look at. So we have money flow. Let's talk about this for a moment. We have money flow going one way. Yet we have price going the other. And of course, we have volume, which is virtually non-existent. So are we quote unquote overbought on the S&P 500? Yeah. Can we go higher? Yeah. Can we go a lot higher? Yes, but we need volume. Let's go to the daily chart. Wrong chart. Daily chart. We're going up. Volume was good yesterday. Not great today, but we're going up. We're probably going to correct soon, but we're going up. Let's talk about the trip Qs. Up nearly 3% on the week. Could you imagine if shorted these back in 2023 when Stokes got overbought? Daily chart. Now, here's an ascending wedge formation. I am looking at this. I am keeping an eye on it. If they decide to take this parabolic and blow us out through the upper band of resistance, which they probably are, then I'm probably going to look to lean into the short side on the triple Qs. Not on a bet they're going to crash, but on a bet we're going to correct. That's it. Simple as that. And that's what we've been doing. By and large, it's been a rare occasion where I haven't been hedged on this market over the past year and a half. Rare occasion. Small caps. This is a leveraged product. Now, the small caps, weekly view, actually, they're breaking out. So we broke out back here. We're doing a retest. Are we interested in the small caps? Really? I'm getting excited, right? Look at the volume. Look at the volume. We have volume. Bravo. I just want to bring up IWM for a moment because this is a leveraged product. So you always want to take a look at the volume underneath the underlying index. Make sure that you just want to validate that it's accurate. Yeah, it's not accurate. All right, so IWM volume is not that great. So this goes out the window because IWM volume is no bueno. Let's go daily. I really been excited if Christ, stockcharts.com, they have totally destroyed this, the way they sort your stock list. All right, so I'm not really interested here. For the most part, what we're doing is that we're in a tight trading range, and if yields can continue lower, here's the upper band. You had a couple of failed breakouts. Here's the lower band. Right now, this is good for selling premium on, sell strangles. While this digests this run from back here in October through December, I'll start getting interested in the small caps. A, if yields continue to decline. B, we break out above this upper band of resistance. Because I bought these small caps, this product, TNA, a couple of weeks ago, and I just got stopped out of it almost right away after a couple of days. So we'll probably, if we break out, I'll get back into it, but not right now. I would like to see some volume. Technology. I want to short it, but I don't want to short XLK. I want to sell a call spread against this because on a weekly time frame, we're leaning into our third standard deviation Bollinger Band. Not only that, volume is light. You go to a daily chart. On a daily time frame, we're into the third standard deviation Bollinger Band. So we're going to get a pullback here soon. So I'm probably going to go out 45 days, sell a call spread, meaning sell a 20 delta call and probably buy a hedge, say 10 delta call, just to avoid any type of a big loss. Because theoretically, you sell a call, you have unlimited risk. But that's theoretically. So XLK looking good here, but we're going to pause here soon. Semis, my God, up another nearly 6% this week alone. Volume is light. Daily view. Long in the tooth. So it looks like we're forming an ascending wedge formation. Not really. I'm going to retract that. It's an uptrend channel. And we're nearing the upper band. This can continue up higher. Biotechs up 8% on the week. This is a leverage product. I think that this is going up. In fact, I may buy calls here on LABU. Now, let's talk about the trade a little bit. If you think that the small caps are perhaps getting ready to move up higher, what do the small caps need to do that? They need the biotechs. They also need regional banks. And that's a tough bet there with the regional banks. So the biotechs look ready to go. We'll check in with the regional banks in a second. Let's see how we close out the day today. We have weekly momentum rising. Daily. We're looking okay here. We're looking okay. Light volume. Let's go 30-minute view. See how they close this out on the day. We like to do this just to see if there was buying into the close, selling into the close. And this is kind of suspect, or sus, as my daughter would say. Could be a little bit of a bear flag setup, or we may just break out. The market's going to tell us. Consumer staples coming under pressure, weekly pressure on them. They're testing the lower band of the rising uptrend channel. They've had a heck of a rally here. Let's go daily view. First, let me pause. Let me check volume. Volume is light. We bought more Philip Morris Altria, symbol MO, dividend capture. Tomorrow is ex-dividend date. If you want to capture that dividend, you need to be an owner of record by tomorrow morning. Staples, daily view, bullish reversal bar on the day. Look at the lower highs here. Lower highs again. So this is sus. Discretionary names. They have broken out on the week. Tesla rally today. Tesla has a seasonality of 70% for the month of June of being higher. No volume, though. Daily view. Okay, not much happening there. I wouldn't chase it. I think I skipped the banks. Let's just go to the, we'll do XLF. It's been under pressure. We own Morgan Stanley, and that's been very disappointing of late. We're rolling over here. Not heavy volume. Let's go daily view. Let's just call it a trading range at current. They had some big selling the past couple of days. Let's check out the KRE. Again, if you want to buy the small caps, you need the regional banks. Regional banks and biotechs must be rallying. I'm not seeing it here. It looks like a heavy chart, a very heavy chart. So what must we see to get excited? A breakout. We need to close above 50 on the KRE. This is our trading range. So right now, no time to buy small caps. Emerging markets, this includes China, building a base, ex-China. And this is kind of impressive to have the emerging market names up, because the dollar, which I don't think we went over, the dollar, oh, we did go over. With the dollar breaking out here, emerging markets they usually trade opposite of the US dollar. So the fact that you have the dollar up along with emerging markets, that's a tell. Let's check out ex-China. So with China, we have, this is a leveraged product. So we can't really do apples to apples here, but up on the week 3 times. So let's call it shy of a percentage point. EMXC, this is ex-China. Doing better than with China. This is not a leveraged product. So this is looking pretty good. When did you buy Mo? I bought Altria a few months ago, and then I sold it as it got overbought. And I bought back those shares today. And once I get back up to par after the exit dividend date, I'm just going to sell them again and look for a re-entry point. I like the shares, but I think that the staple names right now, they're a little bit heavy. But if they break out to new all-time highs in the next couple of days, I'll stick with it. Energy. I haven't looked at this chart in a couple of days. Actually, no, yesterday I looked at it. Energy is weak. Down nearly 1.5%. Let's go daily view here. Yeah, not good. That tells me that oil's up on the week. So this is a major divergence here. Oil's up over 3.5%. Yet energy stocks are down. This may be an opportunity. I wouldn't buy them yet, but I would be. We own them. We own Gush. That's a leveraged product. I don't want to add more yet. Perhaps if we get down to this lower band, let's bring up Gush instead of XLE. That's a Direxion fund. Gush. You got to leg into these things. Gush. I just like saying it. Weekly chart. Momentum, very weak weekly time frame. Let's go daily. Very, very weak. So we'll be buyers soon, but not right now. They're under distribution. Oil, we did. Gasoline prices, they're up and not doing much. Natural gas. This is Boyle. This is a leveraged product. Up about 6.5%. Down 6.5% on the week. Daily view. Daily view. Try that again. All right, there we go. No, that was on the day. I pulled up the wrong chart. Here we go. Well, here's the monthly view. Look at this hookup on the Stokes. Really, really nice. I think this is just getting going. Weekly view. Very, very nice. Gold. So gold is in a trading range. This is a great time to sell premium, sell strangles, iron condors, whatever. If you're long of a gold ETF, you're long a gold stock, sell covered calls, just generate some cash flow because it looks like we're going to be consolidating here. And the primary reason as to why we are going to be doing this for the time being is look no further than this fella here. Dollar is going to keep pressure on the gold stocks. Let's go daily view. This is going lower. And here's a perfect example of what I mean. One trading day left to go in the week, meaning tomorrow. This was last Thursday, I believe, right? What was the 6th. So here was last Thursday. Highs of the week. Look at Friday of last week. Outside reversal bar. Destroyed. So I would avoid gold right now. Same thing for silver. GDXJ, we own this. But I'm not looking to add more right now. We need to consolidate, build a base. NUGT, same deal here. Silver, weekly view down. This is a leveraged product down 2.2%. Let's go daily view. This is a good trading vehicle. This may pop tomorrow. If not, then next week. Silver miners rolling over. Palladium, which I put I got to get out of that position. We put a small position on Palladium, PALL, and that's not working out, so we're going to get out of that. Here's Altria. Now, Altria yielding 8.57%. At current is trading down below the lower band of its rising uptrend channel. So we're going to be owners of record on for tomorrow, but I'm not going to be staying with the trade much longer. Once we get made whole or on or about whole, we'll be out of this because the shares are under pressure. Okay, I think that's it. We want to do let's talk about Tesla. Now, Tesla, let's see what he's doing in the after hours session. So Elon Musk got his pay package. That's in the rearview mirror. So the question is, do we get a sell the news event or do we get a relief rally? I think we got the relief rally this morning. NQ is now positive. Let's check out Tesla, see what it's doing in the after hours session. Tesla closed up nearly 3% at 182.47. Last tick was 182.70, so we're up a couple of dimes. So is it time to buy Tesla? Weekly chart. So on the week so far, we have a breakout. We hit 191 today and we backed off. I think next week we need to do a retest of 180 around there. Volume is light on the week. Let's go daily view. So daily view, we gapped up today. We filled the gap this afternoon. And we'll see what the morning brings. I wouldn't be surprised if they gap it up along with the rest of the market. But I think that we ultimately next week are going to do a retest. And there is where I'll look to reestablish the position. So we'll keep an eye on it. So Tesla, let's go to the monthly view here. And folks, we're using TrendSpider, automated technical analysis. 35% discount code below. I'm getting rid of all these. Remove all. Okay, start fresh. Okay. So here is support. We have stop going down. Here's the breakout. I like it. I kind of like this trade. Think about it. We actually bottomed out in April, but really ever since February, we've just been trading sideways. A lot of back and forth, good trading stock, great time to sell premium. But I think that we're at the point now where, this is a market that likes to rotate out of favor stocks, the big names, the QQQ names back into fashion. Like Amazon didn't break out to new all-time highs until a while after the triple Qs broke out to new all-time highs. Now Amazon is back in vogue. One day you'll have NVIDIA up along with Microsoft. The next day they're down, and you have a couple of other ones that are up, keeping the market moving up higher, Google, etc. So I think that they are going to look at Apple. Look at the laggard that Apple has been. So I think that they're going to bid Tesla up. I don't know about it being a double here, but I think that there's more upside to be had. Will Tesla be Kathy Wood's first winner? I don't understand that lady. I mean, she seems to be a very, very nice person. I just don't understand her buying strategy. Which gold and silver or gold stock were you looking at when you said you're holding? I don't own any independent silver or gold stocks. I own GDXJ. That's a non-leveraged product, putting you long of the junior miners, which are very volatile. I would not suggest you buying individual name in the junior mining space because there's a lot of fraud in those mining stocks. So if you're going to buy an individual name, you're going to want to buy a Newmont, a Barrick, one of the best of breed names. The other one that we own is Nugget. That's a leveraged product for the senior miners. So right now they're just out of favor, right? They had a great run these past couple of months. Now they're correcting, and that's a normal course of events. Once the dollar rolls over, and it will, they'll pick up steam, and it'll be game on yet again. So back to Tesla. I think this goes up. I have a couple of other ones I need to go over here. Where's my list? I know Meta. Is Meta a short? That's the question. So the first thing we want to do is establish the current market environment. So are we in an uptrend? Yes. There's our uptrend. Why do we want to short it? What's our edge? Are we at resistance, like this quarterly resistance level on the monthly chart? We're not there yet. We're not there yet. So from this perspective, looking at stochastics, are we quote unquote overbought? Yeah. Does that mean we short it? No, definitely not, because it can go up higher. Weekly view. Do we have a new weekly higher high? Yes, we do. Are we still up on the week? Yes. Do we see a cause to short this on a weekly time frame? No. Path of least resistance remains higher. Volume will probably come in about average as last week. I think where you need to start looking at the short here is about $40 higher from where we closed out the day today. So I think that the path of least resistance right now for Meta remains up. So I don't see a reason on the monthly or the weekly to short this. Daily chart, I could see the Y behind it. We have a failed breakout at 505 spot 34. You're probably going to get a check back to 505 spot 34 or a retest. If you're going to short it there, you got to use a tight stop immediately above that mark, because that's the Rubicon. We close back above it, we're probably going to break out. Watch the volume. Now, we were down today on below average volume, not institutional distribution. My price target, were you to short it, would be right down here at 496. Risk reward, I don't see the risk reward here. I think that you're taking on too much risk for too little reward. And I would prefer waiting for this upper band of resistance to get tapped, then I would either sell a call spread or short it for a scalp and see how it reacts. And we'll keep this active for as long as we can. That's it. That's my call. Where were the other symbols? What did I do with that list? I haven't gone anywhere. Here we go. GTN. Gray television. I think we went over this a couple of days ago, right? I think you need a washout here. We're down below one support level on a monthly time frame, sitting on top of another one. Actually, we broke through it. These are the automated trend lines. Folks, again, we're using TrendSpider, 35% discount code below. If you're new to technical analysis, you don't know how to do support and resistance levels, they do them automatically. Click of a button. Boom, they're back. I wouldn't buy this. I drew this line the other day when we talked about it. We're down below that support level. They could drop this all the way down to $3.56 at this fractal support level. So I would be very, very careful with getting long here. Would I short it? Nah. You probably couldn't even get the shares to short. That being said, 2 weeks left in the month. If we reverse to close up on the month, then my attitude changes. I'm a very opportunistic guy when it comes down to stocks. So if we see a bullish reversal bar, that may be the bottom. But right now, as it stands, this snapshot in time looks like we're still under pressure. Daily view. We gap down today. They want to take this lower. I would avoid this. Corn. Corn had a massive day today. So one of the key things when you're trading agriculture, you're trading commodities, you need to know seasonality. Just as I mentioned before, Tesla is up 70% of the times over the past 12 years or so for the month of June. So are we in the right environment to put a long trade in here on corn? I would say no. We're only up 43% of the times. And the next couple of months are very poor months in terms of performance for corn. So looking at this chart, we have for the quarter an inside bar, put in a new lower low. We've been in a bear market since January of 22. So this bear market may in fact be over. Let's go to a monthly view. Very true. Very true. That's why you want to check these agriculture reports. Absolutely true. Monthly chart. So we have a breakout. So the technicals are telling me buy corn. Weekly chart. The technicals are telling me buy corn. We're looking at a potential breakout here. Daily chart. We broke out today. Do we do a retest? I think that we do. So my position, would I trade it speculatively, even though seasonality is not in my favor? Yeah, as long as the technicals were good, as long as I had volume. And today we had volume to the upside. What I would do is I would keep my position a lot smaller since I don't have seasonality in my favor. Another way to play it in the futures markets is if you want to sell premium. You want to sell puts or put spread. That's another way to play. What price would you buy GDX? Not at these prices. I don't think that we're there yet. I'm not quite sure where I would do it. I'll go over GDXJ and NUGT. We'll talk about price targets. Because NUGT is going to look the same as GDX. So what do we want to do? We want to know what resistance levels are. Remember what drives inversely GDXJ? The dollar. The dollar looks like it wants to go up. One trading day left to go. So we are now in a clear and defined downtrend. We are at the lower end of the range. I'm liking $40 a share. Let's go weekly view. I'm liking $40 a share on GDXJ. As for Nouget, Jody, thanks for being here. Have a great night. Nouget, as we sophisticates call it, NUGT, Nugget. I think we need an overshoot on Nugget. Between 33 and 35 per share, that would make me happy in that range. But I wouldn't pull the trigger until I saw the dollar beginning to peter out, stop going up, do something that's indicative of the rally coming to an end for the U.S. dollar. As long as that dollar continues up higher and we don't have geopolitical risk, because some of you may be out there saying, wait a minute, I'm looking at my charts right now. A couple of months ago, the dollar and the gold stocks were going up at the same time. Yeah, because it was geopolitical risk. You had Iran launching missiles at Israel and vice versa. That'll cause a flight to safety. We don't have that right now. It's pretty quiet right now. So you need to respect that historically inverse correlation of the two. If you forget to do that, it's going to come back to haunt you. So I would strongly encourage you to watch the dollar before you go looking at these gold stocks. And that's it, folks. I'm going to call it a night here. Thanks for being here. Like, subscribe, you know the deal. Trend Spider 35% discount code below. Or if you watch this on the Twitter, linked up in my link tree, you'll find a link and get that discount code. Thanks for being here. Have a profitable trading day tomorrow and an awesome weekend. Be well.